Well, this was the low that we saw early on Monday morning. The British pound hit $1.03. That is a level we haven't seen since 1985. Lower than a Black Wednesday, which you have here in 1992. That is when sterling collapsed, or 2008, the financial crisis, or, of course, the Brexit vote more recently in 2016. The US dollar's strength is another side of this story, but the moves for sterling compared to other currencies are really significant. Now, as the pound fell, it was the opposite story for government debt. Here we have the 10-year UK bond. So what we're seeing here is a huge surge in the cost of borrowing for the government. In fact, the yield for the 10-year, over 4% on Monday. That is the highest level we've seen for more than a decade. Why this market fallout? Well, here we have new Prime Minister, Liz Truss, the new UK government, and this is when it unveiled its big spending plan at the end of last week. It wants to implement big tax cuts. That is going to cost it thinks, £45 billion between now and 2027. Now, also, though, it wants to spend lots of money to try and subsidise people's energy bills. This is for households and businesses. It thinks that will cost £60 billion, and that's actually just in the next 6 months. So they're going to have to borrow a lot of money. Now, here in blue, you can see what the expectation was for the UK government borrowing. That was before this plan. Here in red, you can see where it might go. This is an estimate from the economic research body, the Institute of Fiscal Studies and Citibank. And you can see for this financial year, it's expecting borrowing to almost double. And for next year, more than double. So that is a lot more money. The government needs foreign investors to lend it money. And of course, right now, they are shying away from UK assets. So they need more confidence. So on Monday, the Bank of England was rather expected by some economists to take some sort of immediate action, maybe an emergency rate hike, despite raising rates just last week by 0.5 percentage point, which is actually the 7th consecutive hike we have had now from the Bank of England. Instead, this is actually what the markets got. They had a statement from the central bank saying they were monitoring developments, and they had this tweet from the Bank of England governor saying they won't hesitate to change rates as needed to return inflation to 2%, a line we've heard many times before. So now it's up to investors whether or not they feel this was enough to bolster their confidence in the UK. Anna Stewart, CNN, London.